launch products, especially in the specialty and biological categories, while developing leadership in horticulture segment. With access to a specialty marketing channel in field forces to complement each other. We are planning to repurpose the association of manufacturing so that we can produce molecules to our export order book, also keeping up with strategic objectives. We are developing in-house capabilities for some of the outsourced intermediates. With these measures, we expect the capacity direction to go up significantly and pick up to contribute robust and concise. Merge activities will get complete by Q4 of the current year. Our outlook for 21 remains robust, which is shaped by new brand introduction, domestic and expanding operations and exports. We benefit from higher capacity scale of commercialization for existing molecules and new molecules add to our mix. We are also expecting domestic market resume growth in the current year, given the favorable outlook of agriculture and agri inputs emanating from the prediction of normal monsoon, increased crop acreages, favorable water conservations and water reservoirs, central government packages and stimulus to agriculture at these times.
The conference is now being recorded.
It is a long-term growth which secured the approval of shareholders to raise up to 20 billion rupees. Our objective remains strategically utilizing these funds towards supporting strategic growth opportunities and continue to grow momentum. Due to the prevailing uncertainties in the capital market, we had therefore the QIP originally planned in April, but we are currently reviewing and consulting with our bankers to decide the timing issue in the near future. This brings me to the end of my remarks, and now I hand it over to our dear Subhash Anand to carry forward the discussions. And Subhash, over to you, and thank you once again to all of you for coming on to this call today.
Thanks, Mayank, and good morning to everyone. I'll share the financial highlights for the quarter and full year ended 31st March 2020. All comparisons are to Q4 of FY19 and on consolidated basis. During the quarter under review, we reported 6% growth in revenue to 855 crore, driven by 12% growth in export to 683 crore. Domestic revenue stood muted at 172 crore, primarily on account of deferment of product positioning to Q1 of FY21, owing to disrupted operations and movement of goods during the lockdown. EBITDA improved by 7% to 187 crore, translating to EBITDA margin of 22%. EBITDA performance was a result of favorable product mix, and this was maintained despite higher input costs due to initial COVID-19 impact. Profit after tax stood at 111 crore, lower by 12% as compared to same period of last year. Contraction in PAT was mainly due to increased depreciation during the quarter. Let me also quickly run you through the FY20 numbers for you. Revenue increased by 19% to 3,367 crore, while EBITDA improved by 25% to 718 crore. Margin enhanced by 104 basis points to 21%. PAT came in at 457 crore at a growth of 11%. In light of strong performance reported by the company, the Board of Directors approved payment of final dividend of 100%, that is 1 rupee per equity share of the face value of 1 each. Solid performance during the year resulted in 30% increase in operating cash flow, which further strengthened our balance sheet position. Total debt net of cash as of 31st March 2020 stood at 241 crore, and debt to equity still remained at very low level of 0.15x. During FY20, we entail a capex of 635 crore towards capacity and expansion activity at Jambusar SEZ, and additional 400 deployed in acquisition of Isagro Asia. We are in growth phase and continue to emphasize a capex of rupees 600 crore to fund our strategic initiative in FY21. Overall, we remain confident of attaining 20% plus kind of a growth in FY21, backed by continued healthy demand and assuming that COVID-19 curve will soon normalize. That concludes my opening remark. I will now request the moderator to open the forum for Q&A. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. In the interest of time and fairness to all participants, please restrict questions to 2 per participant. If you still have more questions, please join the queue afresh. To ask a question, participants may press star 1. We have a first question from the line of Hitesh Gupta from Ambit Capital. Please go ahead.
Hi, sir. Thanks for taking my question. Just on the domestic side, we saw a 6% decline on a FY20 basis, and even on 4Q, there was a decline of about 12%. So could you just guide us a bit on the domestic business, what's happening there, and what I see in the news articles or what I see generally is that Ocean, which is a large product for us, also becomes generic going forward. So just on the domestic bit, I know CSM has been pretty fantastic, but just wanted to kind of check on the domestic side as well.
Okay. Shall I take this? This is Raman. So thanks for the question. So on the domestic side, as you heard from Mike in his opening remark, as in the last quarter, one big impact was 100 crore of sale, which was planned in March, essentially as a pre-placement strategy, which is our strategy every year, could not be executed because of the lockdown in the last 10 days. So this primarily is one big impact that you see in terms of the last quarter impact and also on the full year. The second question on Ocean and Ocean going generic. Yes, I believe Mike has a certain view on this, and I kind of reiterate that first, and maybe he might chip in later. We do believe that the procedure with which this approval of generic has been granted is something that can be challenged because there have been some inconsistencies in the way this approval has come in. But having said that, we are very, very clear that in India, when we build the brand, a life cycle management of the brand and the product becomes an essential part of the long-term strategy. And I'm very happy to say that we do have very, very clear life cycle management approaches and strategies in place, which gives us confidence that the impact, even if the generics do come in, would be minimal. And we have established and we have a track record of doing this. And as you may know, the nominee also went generic maybe 4 or 5 years ago, but we continue to expand the brand and grow in the market.
Sure. And on nominee gold, the kind of pricing pressure that let's say at least the generics have done. Do you think that the pricing erosion is over and probably I'm not sure when does the India manufacturing for nominee gold start, but could it mean that we could have more flexibility or can we be more aggressive there?
Well,
Mike, you want to take that? Yeah.
Didn't get your question. What do you mean? I didn't get your question.
So just on nominee gold as well. So nominee gold, I'm not sure if the domestic production has started, but does it give you more flexibility in terms of margin or in terms of your pricing competitiveness of the product? This was my question.
To be honest, the domestic production has already started, and it gives us flexibility, and clearly whether that was there or not. But if you see year on year, strong effort and a strong marketing capabilities, the company has only increased its market share with 50 plus odd brands. So hence, gives us the confidence that we have the formula in place to manage generics and also continue to grow. Yeah.
Sure. Subhash, can you just remind us on the new plants as well? I mean, in last 6 months, what all new CSM plants you commissioned, and what is the status of the plant which had faced an issue, and when does the new plants come into commissioning in 22?
Well, MPP 9 has started in that, and it is kind of it's now started production. MPP-11 was just started in March, but obviously due to COVID, it got impacted in taking it to full capacity and startup. Clearly, as you know, a new plant startup takes some time. Thirdly, we were also impacted at least a 15-odd days of production shutdown. So, to start a plant back up, it takes another month to really get it back going. And that production plant is now started, and we will start seeing that sometime from this month. We will be getting the capacity to a certain extent. It will be full steam by the next quarter.
Got it. And just.
So I'm sorry to interrupt. Would you like to come back in the queue?
Okay.
Thank you. Participants, please restrict questions to 2 per participant. If you still have more questions, please join the queue afresh. We have next question from the line of Chetan Thakkar from ASK Investment Managers. Please go ahead. Mr. Thakkar, your line is unmuted. Please go and ask your question.
Hello.
Yes, please go ahead, sir. We can hear you now.
This is Bharat Shah, not Chetan Thakkar. Hi, Mayank and the whole team. 2 questions. One, it was good to see now finally some success on the pharmaceutical side, and would like to know a bit more about it in terms of how things may expect it to work over a period of time. And secondly, on the research pipeline, if some amount of light can be thrown in terms of how things may look over next 3 to 5 years.
So yes, that's about the pharma. As you've seen, that we've been looking to work with some of the intermediates. We have tied up a couple of business opportunities, and obviously the first one, which is commercializing, is going to be the intermediate, which we are working with the Japanese and certain local Indian companies for supply of an intermediate based on a unique technological platform that we've been able to deliver. This capability. Obviously, the drug is under evaluation and trials right now, but if it meets success, the company is ready to commercially support the demands which may come along maybe after the next couple of quarters. And in the present time, looking at the capacity and optimizing and augmenting our capacity to go into commercial production to meet the requirements more for trial and approval for a large-scale manufacturing are already being done. In terms of the R&D, and I'm sure and confident that in the pharma, in the R&D, we're looking and evaluating a host of intermediates which offer a good opportunity for the Indian market segment and the global segment, given the global opportunity arising out of the China challenge, and are augmented by our technological capabilities and process capabilities that we have, and be able to develop unique processes which will help us give a unique position in some of those, and those have been identified. And we'll be working on that over the next 3 to 4 years and moving ahead with our pharma strategy. Regarding the R&D, the company has been developed many opportunities. I would say that in this year we have filed about 22 odd patents, and we continue to develop our R&D ability, and we do see a very positive outcome, and the outcome of R&D deliverables have been very positive and aggressive in this year, and we are confident that in the next 3 to 4 years we'll be in a position to capitalize in a very large way of all the work which has been put in R&D over the last decade.
And will it be fair to say in next 3 to 4 years' time, pharmaceutical side of the business would be a strong double-digit kind of percentage of the total business?
Well, the objective is to cross the double-digit as a part of the business, yes.
And you believe it is likely?
Well, as you know, we just started and we're confident as we've been talking about first entering it. So as you see that we've entered it, obviously we made plans which will ensure that we can get there, and pretty confident of seeing how we can do it. But obviously, there are challenges when you're getting into a new play. But I'm sure and confident that we have the requisite competence and capability to handle those challenges and deliver our objectives to what we plan.
Thank you, Mike.
Thank you.
Thank you, sir. We have next question from the line of Varshit Shah from Emkay Global. Please go ahead.
Hi, sir, and Mayankji, Anandji, congratulations for a great quarter despite the challenges. My question is a sort of carryover from the previous question on the pharma side. So what is the broad macro strategy in terms of winning new business? Because we already have existing players in some form. Competition is already more matured compared to our core business in the pharma segment. So what is our USP when we go to the client? Is it process innovation and leading to cost savings for the client, or is it something else? I'm just trying to understand. Or is it that we are?
Let's answer this in a way that you know very well that I don't answer my strategies out very openly, which I hold very close to our chest.
Sure,
Clearly,
sure.
you have a unique capabilities in some of the areas which we want to use and leverage to put into our competent areas of what we are challenging in the pharma space. That's really where we are going. Yeah.
Sure. I'll take that. And sir, secondly,
and it's more driven by our competence in process and technology.
Understood. That's helpful. Sir, secondly, on the capex, so can you just split that 600 crore capex into how much for Isagro and how much for PI? Is it possible?
Subhash, can you go for that, please?
Okay. In fact, majority of the capex is for PI. Yes, there is some capex which we are putting on Isagro to refurbish and revamp Isagro plants to our level. But most of the capex is a growth capex, and the kind of a growth we are looking. So this is the capex which we have planned for that.
Sure. And if I could squeeze in that last one, so in the domestic business, I think you have done some product rationalization and some tail cutting. So is that also one of the reasons for improvement in margins, the overall EBITDA level? Is that the right way to read it, or is it coming from the core CSM business?
Yes,
Hello?
your reading is correct. In fact, some of these end of life cycle products have been, withdrawn, which were having a lower margin. So therefore, this has also helped improve the overall, margins of domestic segment. So yes, you are right in your reading.
So our core ROC is actually would have improved, although your revenue might look slightly lower. But
yes, you're right.
Profitability has improved actually. That's it from my side, and thank you so much.
Thank you. So we have next question from the line of Kunal Mehta from Vellum Capital. Please go ahead.
So thank you for the opportunity. My question is to Subhash, sir. Sir, when we look at your business on a macro level, so should we see our sector and PI, especially CSM manufacturers in India, of which PI is a very important component, as a derivative of the global agro cycle? I mean, or should we, or would you say that after having this huge order book and enormous competence built into ourselves, we would be able to de-link from the cyclicality of the agro cycle? So how should we see? So what I mean is that are we at the growth phase of the cycle, and then for few years the volumes may limit themselves, or how should we see this from a 5-year perspective?
I didn't get the question very clearly. What are you exactly looking at? Just let me get that question clear.
Sure, sir. So the question I wanted to understand was that given the place where the global agro cycle is, we are at the absolute trough of the global agro cycle, and we are going to see few years of very good growth across the industry for the next few years. But after that, as we have seen in the past, after 3-4 years of good growth, we see a phase where volumes are fairly stagnant for the next 2 or 3-4 years, considering the cyclicality. But when you look at your PI, would you say that now we have become fairly diverse enough to dealing for ourselves from the cyclicality and have a consistent growth across the years?
I think we've been demonstrating that in the CSM business over the years, correct? And we will continue to do that, and therefore diversification while capturing growth and diversification into other areas, and also ensuring that we capture the right products and the right in the value chain. We will continue to demonstrate and will continue to demonstrate the growth rate, because objective is very clear to grow. The growth is life, as we've identified as a part of the CSM business. Yes.
Sure, sir. And so second question I have is that when you typically commercialize a molecule, for how many years have you been working with the partner to get to that stage?
Well, typically it is 2 to 3 years before you get to the stage. In certain cases, it can be 4 to 5 years. I mean, it gets commercialized, but obviously it takes time to scale up, specifically when you're in the innovator cycle. But once you get it, the consistency of growth is something which you experience.
And so just to follow up on that, so these set of intermediates which we manufacture for our partners, those are used in the new generation products which they launch, which are patented. Am I correct?
In agri?
So I'm sorry, sir. Can you repeat?
Are you asking this for the agri segment?
Yeah, agri segment, the export segment, CSM business.
The agri segment, obviously in the agri export segment, we are doing both intermediates and AIs, and both of them are, yes, as a part of the new innovative molecule pipeline.
Understood, sir. Thank you for answering the question.
Thank you. So we have next question from the line of Surya Patra from Phillip Capital. Please go ahead.
Thanks for this opportunity, sir. Just two questions. One is that, sir, did you see any kind of incremental export opportunity in the post-COVID scenario, either for your agri or other areas?
No, sure, there is a potential which we do see is going to come, but I think right now the world is settling and dealing with the present short-term challenges and making sure they have enough capacities and making sure supply chains are met out. But looking at the way the strategic directions are going, very clearly, I do see new opportunities would emerge specifically for the Indian market.
So, while continuing on the same question, sir, you mentioned that, while pharma is a kind of a potential opportunity, now you are clearly seeing that. So, can you just elaborate a bit on there are molecules which are in the developmental stage that you are working with few of the partners. Also, simultaneously, you have mentioned that you are working on few of the intermediates for the local manufacturers. So, are you open for generic intermediate manufacturing as well? Hello. Can you hear me, sir?
Yes. So again, if you were to look at the generic or non-generic, again, it will depend on the value offer that we can bring to our customer. Okay. And if we have something unique in terms of process or capabilities, why not? As far as it is as you would appreciate, our business model is that of a non-compete to support and work and we work in a partnership model with our global innovators. So we will obviously keep that in mind before we look at any of these strategies.
Okay. And on the capex front, as you guided towards about 650 odd crore kind of capex for the current year. So, or even following year, let's say, similar capex, even if it continues, how much would be for agri-related activities and what would be the amount that would go for our new initiative? That, and simultaneously, sir, if you can talk about something on the inorganic growth aspect that you have mentioned in your presentation.
Subhash, are you going to take that?
Yeah.
Yeah, so these 600 odd crore capex that we are guiding, this is mainly for our organic, growth, wherein we have clearly identified the capacity increase, opportunities, and we have to increase and expand capacities. We have to also spend in, as Subhash was earlier explaining, repurposing some of these existing facilities in Isagro. So 600 odd crore is basically towards organic growth opportunities where we have significant amount of visibility. Okay. On the other hand, we are also evaluating certain inorganic growth opportunities. As you would know, before COVID disruption, we were already evaluating these opportunities, and we were also working on equity raise through QIP. But then, yes, of course, this whole process got disrupted due to COVID-19 situation. We are currently reviewing this whole process. Obviously, there were different priorities at our end and at other companies' end. But now, as the things are normalizing, travel restrictions are also being taken out. We are again reviewing, and this whole process is again restarting. We have internal discussions planned later this week, early next week, on the timing of this equity raise, and alongside we will also decide on some of these inorganic opportunities that we are evaluating. But all this is in process as of now.
Okay, this inorganic would be in the agri side or non-agri? So if you just last.
This would be broadly in the adjacencies, not so much so in agri side. Part of it could be in enhancement of technologies or de-risking some of these operations which are concentrated right now in India, and apart from this also into adjacencies like into pharma or other specialty chemical areas.
Okay, sir. Yeah. Thank you, sir. Thanks a lot. Wish you all the best.
Thank you, sir.
Thank you.
We have next question from the line of Abhijit Akella from IIFL. Please go ahead.
Yeah, thank you so much for taking a question. First one is for Subhash ji. If it's, it seems like the ISAGRO revenue contribution for the quarter is about 60 crore rupees, if I'm not mistaken. Is it possible to just give us a breakdown of how much of that is in the domestic business and how much is exports?
Yeah, just a minute. I'll just give you that number. That 60 crore breakup, 33 crore come from domestic business and rest from export business. Or from export. Hello?
Got it. Yeah, got it. Thank you so much. And second was regarding your 20% growth guidance for FY21. Is this inclusive of the revenue from ISAGRO, or is this purely organic growth we are talking about, and ISAGRO is over and above on top of this?
All this
Rajnish,
is inclusive. Yeah. All this is inclusive, of ISAGRO. And obviously, while we see a lot of growth opportunities both at ISAGRO side and also the other, export and domestic side, but given the current uncertainties around the COVID-19, we are a little cautious in guiding. But yes, we are confident that there should be certainly 20% plus kind of growth that we should be achieving in this year.
Okay, understood, sir. And just one last quick thing, and I'll come back in the queue. The presentation does talk about certain mark-to-market losses on the balance sheet because of INR depreciation. So if you could just quantify that and tell us, how exactly these have been treated on the balance sheet. Thank you.
Abhijit, this basically, since we do hedge our FX for next couple of years, you would have read in our balance sheet also. So every quarter or actually every month end, we need to do a mark to market to our forward contract. And since dollar depreciated in last few months pretty rapidly, so we do have this mark to market losses which go and get captured in OCI, which is a part of balance sheet and net worth. But it's only a notional loss. Over a period of time, it comes back and becomes a normal part of revenue because at over a period of time, dollar do appreciate again, and it gets neutralized. And what we have booked forward for 1 year, 2 year, finally sales or revenue gets booked at the same rate. So it's a temporary difference which comes and sit in balance sheet, gets phased out over a period of time.
Okay, that's helpful. Thank you so much. I'll come back in the queue.
Yeah.
Thank you, sir. We have next question from the line of Probal Sen from Centrum Broking. Please go ahead. Probal Sen, your line is unmuted. Please go and ask your question.
Am I audible now?
You are.
Thank you. Sorry for that. Thank you for the opportunity, sir. Sir, on the pharma intermediate that you spoke about, which you have just started work on with the Japanese company, is it too early to sort of get a sense that, if the clearances come through, as you said, you're already rapidly preparing for even commercialization over the next couple of quarters. Is it possible to get a sense of what revenue potential or what is the size of this opportunity as of now? Or is it too early days as of now, sir?
Whatever. One is too early to respond on to this. Obviously, and the startup, would have very sizable opportunities. But if things convert, they could become of a decent size. Given the context of size, CSM business is not going to be very large.
Okay. And sir, the other question was in terms of the CSM order book today. Forgive me if you've answered this before. Is it possible to get a sense of which geography or which area, the order book is sort of dominating? Is it possible to get a little bit more detail of the $1.5 billion book that you have? Just the composition of that, if you can share any details.
Well, I don't have the details on the hand. Frankly, we don't share those details because the nature of the discussion with the customers.
And geographical breakup is also not very relevant because what happens that the product is supplied to certain countries and these countries are, supplying these products across the world. So, frankly speaking, geographical breakup is also not very relevant or meaningful in that sense.
Got it, sir. One last question, if I may. In terms of the overall revenue guidance, is it possible to get what your assessment is in terms of the domestic business picking up in terms of growth? Will it be more than 20% or slightly lower, which will be ended up by CSM? Would it be possible for you to share your assessment today of the domestic business?
Current assessment is certainly yes. I mean, we see equally good opportunities of growing at this pace, 20% plus in both the areas, in domestic as well as export. Even in domestic, as you would also be reading, there is a very positive commentary around the monsoon, around the acreages and around the water reservoir. So we see good opportunity to kind of again bounce back to this kind of growth in domestic as well.
Super. Thank you so much for your time.
Thank you, sir. We have next question from the line of Vishnu Agarwal from Spark Capital. Please go ahead.
Yeah, so this is Vishnu Kumar from Spark Capital. Good morning. It's heartening to know that multiple levers we have for growth for the next couple of years. Specifically on pharma, at what point in time will we be deploying a large capital, let's say a 300 to 500 crore range? Would it be like 2 years from now, 3 years from now? Any color on that?
Well, we are already, working on this. So there are two levers. One is our organic lever, where, as Mayank explained earlier, we are already working in pilot scale, heading towards commercialization of some of these technology-driven intermediates for COVID and some other, important drugs. So this is all driven in-house, okay, and we have been working on some of these things for last few years, and now these things are fructifying. On the other hand, we are also evaluating currently very actively some of these inorganic opportunities so that we can short path this whole process and get to the next level sooner. So yes, I mean, we are working on both these levers and both these opportunities, organic and inorganic, to kind of speed up and expedite this whole process in this particular segment.
Is it fair to say that at least in the next couple of years, our pharma piece would at least contribute something like 15-20%, say 3 years out, or probably we expect it to be slightly more?
Yeah, it should be. We are confident that it should be in double digits now. Whether it is 11, 12% or 15, 20% is everyone's guess. But yes, our objective, internal objective, is to make it meaningful in next few years.
Got it, sir. And on the fundraise, you just mentioned that you're working with the bankers, but rough timelines and roughly, if you could tell us that what is the outer bound that you are probably thinking that you'll get things completed by, and probably including the acquisitions you're looking at.
Well, acquisition obviously will depend on the how much we can expedite this whole evaluation process, because that is not entirely in our hands, because a lot of things are involved there, and current situation is also not greatly helping. But as far as fundraise is concerned, we are, as I said earlier, we are internally discussing and also consulting bankers, and I hope in next 1.5 months we should be coming out with a clear answer on that.
Sorry, sir. One final question. In terms of your order book that you're currently having, any conversation that you're having on the agro side, any slowdown on the next 6 months? Are customers asking for more, or is there any slight delay in the schedule?
Well, we have so far got very positive commentary on demand side from our global customers, and that is something that we had assessed immediately post-COVID or start of COVID scenario. So far, the commentary is quite positive, and we have not heard of any postponement and deferment on some of these orders that we already have in hand.
Okay. And just one point on the...
Sir, I'm sorry to interrupt. Would you like to come back in the queue? Thank you. We have next question from the line of Andrick P. from Cogito Advisors. Please go ahead.
Yeah, I wanted to ask two related questions. In your presentation, you have said that you will explore adjacencies as far as your export market is concerned. Could you just tell us about what these adjacencies could mean apart from the pharma opportunity? That was one. And the second is that given your growth in the exports business, at what stage are we? In the sense that are we mainly growing by increasing orders from our existing customers, or is there a significant growth from new customers? And which of these two areas of growth are more profitable to us? So if you could look a little forward, how should we look at our export growth, both in terms of the nature of growth and the profitability of this growth?
Well, when you look at the nature of the growth, it's coming from a mixed bag, yes, which is based on obviously new and existing customers, as you will know. The customer base is very small in the agri business. So obviously NPI is working with most of the customers. So it's coming from a portfolio of new products and a mix of the existing products. And as we said, we indicated we're continuing to grow, and growth will give us some operating margins, and I would say profitability would continue to be at the level that we are looking at.
Okay. And about these adjacencies that we spoke about?
Pardon?
The adjacencies. You mentioned that you will...
It's a different segment with a different customer base. Yes.
Oh.
And obviously the target is to look at this within or above that value chain. Yeah.
So what kind of adjacencies are we talking about? So these are in various specialty chemical segments like personal care, imaging chemicals, electronic chemicals, and pharma we have already discussed. So there are different segments where we can replicate this custom synthesis manufacturing model driven by our technology.
Thank you.
Thank you, sir. We have next question from the line of Rohan Gupta from Edelweiss. Please go ahead.
Yeah, hi sir. Good morning. Sir, first question is on since we have seen the delays in our QIP money raise, and before the COVID environment, it was anyhow that you were in an urgent need of probably fund to grow the business, and I think that you were anyhow having something ready in organic and inorganic growth plan. So I just want to understand that almost 6 months likely to be delayed, and we don't know how the environment will pan out, as you also mentioned. Do you see that it has derailed some way the growth strategy which we were working almost 6 to 8 months back and now? And are there any major changes in the growth strategy post-COVID environment? That's what I want to understand.
Yes, so certainly there is no derailment. We are very much on course on our strategic path that we had laid for ourselves, 6 months back. Okay. Yes, there is some delayed deferment because of this COVID disruption, both on evaluation process of these inorganics because of different priorities on the part of all these companies, and also travel restrictions, and therefore obviously the progress what should have happened in last couple of months has not happened, and now again things are resuming, the process is resuming. And at the same time on equity raise point also, I mean, we were not kind of that much in hurry. Yes, we had an original plan to do that somewhere in April, but because of capital market uncertainties and other things, we decided to kind of postpone this. And as I said earlier, we are again reviewing this in next couple of weeks, and will come out with clear plan on timing aspect of it. But we are very much on course to our strategic path. There is no change.
Okay. Sir, second question is on, are there any low-hanging fruits on which we want to take the benefit because of the China problem? Or do you see that any consumer behavior changes happening after this COVID event has happened, and how the world is showing anger towards China? Many companies still have a sourcing partner from China. So do you see that there are any near-term low-hanging opportunities which you are experiencing, or customers' inquiries are showing that they are in desperate need to shift their sourcing base from China, or increase the sourcing base from you or any other country? Are you seeing any change in customer behavior?
Yes, so certainly, I mean, not only I would say COVID-19 impact, but otherwise also for last year and a half, there is some sort of reshoring happening from China. Most of these global companies are very keen to kind of build their alternatives in other, Asian or American companies in order to get over these uncertainties which are prevailing in Chinese chemical markets. So yes, as we have also guided in past, that the inquiry flow has significantly increased in our case as well. But as you know, we have our own principles of getting into, certain set of products only, not getting into generics or commodities or these kind of products. So given that, still we have got a decent number of inquiries in last year and a half. And the pipeline in R&D has also increased quite substantially. But this process of custom synthesis manufacturing is such that there is nothing short-term here. You will have to spend good enough time in process scale-ups and then commercialization. And in any case, in our business model, we do not sit on idle capacities. We kind of assure the business first and then invest in capacities. So in that sense, yes, we have got quite, uptake in our inquiries and R&D pipeline, and I'm sure this is going to significantly help in further strengthening our visibility for next 3-5 years and building a good business pipeline order book for these years. But yes, certainly there is a change because of whether you call it tariff war, uncertainties in China, environment, safety incidences, and then on top of it now COVID. So there is certainly reshoring happening.
Okay. And so just last question.
So I'm sorry to interrupt. Please come back in the question queue. Thank you. We have next question from the line of Aditya Jawar from Investec. Please go ahead.
Thanks for the opportunity. I just wanted to understand in the domestic business, what is the kind of product concentration that we have, in the sense what could be the contribution of the top 5 molecules in our revenue, and how it has changed over a period of time. The question is because in the past also we have seen that certain products like Nominee impacted our overall performance in Ocean. Earlier quarter I was giving competition to Ocean. Then now Ocean becoming generic. So what could be, and if you do the benchmarking versus peers,
how do you see PI stack up in product concentration?
Well, your voice was absolutely unclear. I don't know whether.
So let me see if I understood your question. Your question is, what is our portfolio strategy, if I were to rephrase it, to make sure that we are not betting on a few big brands and, if they come under generic, then we are under pressure. Is that the question?
Yeah. So my actual question was that what could be the contribution of the top 5 molecules in the domestic business? Because in the past we have seen lumpiness in sales because of few molecules. Earlier it was Nominidol, now it is Osheen. So Osheen saw a significant increase in competition from Corteva in 2018, and now that is also scaling up. Now we're talking about Osheen becoming generic. So to do a benchmarking of concentration with peers.
Any crop protection business that you take, there are about 5 or 6 brands which would contribute to upwards of 50 to 60% of the sale, and I think ours is no different. But what is important is, do we have a very clear portfolio of freshness?
The person you are speaking with has.
Yeah. So the question really for us is, do we have a portfolio of freshness strategy? And to that, I think we are consistently launching new products. Last year, we launched Apkira, the wheat herbicide, which we expect in the next 3-4 years to be another leading brand. And every year for the next 2-3 years, we have at least 2 or 3 new products that are being launched. And we are at this time tracking about portfolio freshness around 30-35%, which means products launched in the last 3-4 years are contributing upwards of 30-35% of our sales.
Okay, that's quite helpful. The next question is just a clarification. The pharma, the shipment that we talked about in the presentation, we both for Japan and India, both are subject to the approval. The trial getting tested. Then it might commercialize in Q2 and Q3. Is that correct?
No, these are not subject to approval, but these businesses are already tied up at a relatively lower scale. And what we are saying that once these products are also commercially launched in other countries, because right now they have been launched in only few countries, but once they are launched in some other countries as well, which is what is very much expected, then these volumes will significantly increase.
Okay. That's very helpful, Sharmaji. And congrats between pharma. All the best. That's it from my side.
Thank you.
Thank you, sir. We have next question from the line of Chintan Modi from Haitong Securities. Please go ahead.
Yeah, thank you for the opportunity. On the domestic agrichem business side, have you taken any price hikes for the upcoming Kharif season?
Yes. Yeah.
How much would that if you put on an average portfolio level?
Subhash, do we discuss that at this point?
No, in fact, we have taken price increase. It depends product to product. It's not universal across all the products we have taken. So we'll not quantify this point of time being competitive, but yeah, price increase has been taken, I call it.
Okay, sure. And last 2-3 years, we have seen huge raw material price increases and volatility on the import side. Do you think that this volatility has kind of stabilized now and we could see a margin expansion environment being set?
I don't believe there is, at least from a domestic business perspective, the volatility and supply-demand gaps are fully stabilized. We will come to know more in the next 4 to 6 weeks about that.
Okay, sure. Thank you.
Thank you, sir. We have next question from the line of Chirag Dagli from HDFC Mutual Fund. Please go ahead.
Yeah, so thank you for the opportunity. Sir, versus say 5 years back, on a similar India sales, how would our margins for the India business have behaved? Just some broad direction would help, sir.
We have sustained, maintained. In fact, we have only marginally improved the margin. by rationalizing end of life cycle products and all.
Understood, sir. So margins would have improved marginally. All right. And sir, this pharma intermediate that you're supplying, did it go through any regulatory inspection by the authorities? Did our plants go through any regulatory?
Since we are making only intermediate, so our manufacturing sites have not undergone any government inspections or anything.
Okay, so that is helpful. And just the last clarification, sir, this 20% sales growth that we have, this is in INR terms, sir?
Yes, obviously, because we report our revenues in INR, so it is certainly in INR.
So because there is a significant tailwind in the currency depreciation, right? So are you building in some buffer given the uncertainties? Maybe it could be higher.
Well, that is anybody's guess whether we have reached to the bottom or not. So we do not speculate on that at all, frankly. And if that happens, this will only help us improve on these numbers. But, when we make these kind of assessment and guide, we consider the normal current situation on currency and all other things.
Understood, sir. Thank you so much.
Thank you, sir. We have next question from the line of Ashish Thakkar from Motilal Oswal AMC. Please go ahead.
Yeah, thanks for the opportunity. Sir, given the trend, given the business mix where we are heading towards, like more of CSM and within CSM also more of and is there a
Your voice is absolutely unclear.
Sir, I'm sorry to interrupt. Your voice is not very clear. Please use the handset. Thank you.
Am I audible now?
Yes, very much.
Yeah. So given the inherent change in the business mix going ahead, so more towards CSM, pharma, all those things, is there a case wherein there could be gross margin expansion and we can eventually see even on the EBITDA margin side we can see expansion in the coming years?
Well, there would certainly be opportunities, but at the same time, you'll also appreciate that we'll be making new investments, new plant commissioning, and all these factors, at least in the initial phase, have not so positive impact on the margins and all. So therefore, to be on a safer side, we will say that we will be able to sustain these current margins. However, there would certainly be opportunities to improve them further by changing the product mix or favorably changing the product mix.
Okay, fair enough. That's helpful. So apart from on the chemistry side, so we are there in bromine already. And off lately, we were also wanting to work on fluorine side of the chemistry. So if you could help us understand how far we are from, starting our first commercial fluorine contract, or if you could help us understand.
Well, we are not working on the building blocks like fluorine or some other building blocks that you mentioned here. Our more focus is towards process technologies, and high value add into these processes, and some of these, technologies and, value add opportunities. Obviously, we'll not be able to share and talk too much about it on these calls, but our more focus is on value added process technologies and not so much so on building blocks.
Okay, fair enough. That's it from my side. Thank you and all the best.
Thank you very much, sir. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments. Sir, over to you.
Yes. So thank you, everybody. We deeply appreciate you coming on this call. And once again, from the PI management, Mayank Singhal and team, we wish you guys a happy and a safe days ahead in these very challenging times. All the very best. Thank you once again.
Thank you very much.
Thank you. Bye-bye.
Thank you, gentlemen. Thank you, sir. Ladies and gentlemen, on behalf of PI Industries Limited, that concludes this conference call. Thank you for joining with us, and you may now disconnect your lines.